All right, it's connecting. It says connecting.
Yep.
All right, we're live. Awesome. So welcome to the not future but present is DeFi and DAOs. My name is Ofer, and I will be your host for today. Yay! I can't hear you clapping, but I'm sure you are. So we'll start by introducing Avishay Ovadia, who coincidentally works with me for the past 2 years, and he is heading Collider Labs. I know Avishay since his days at blockchain JLM, the Jerusalem instant of our blockchain community in Israel. And yeah, Avishay, take it from here.
Sure, thank you, Ofer. Thank you for having me. Thank you, the Bitfwd community and Huobi for organizing the event. So nice to meet you all behind the scenes. And I want to tell you a little bit about myself and the story about Collider Labs. And in a second, I will show you the deck of our activity. So just a few words about myself and my journey. I used to be an entrepreneur. I founded 2 companies. Sold my second one, then, as Ofer said, started to build non-for-profit communities to promote crypto and blockchain, and then started to advise a company called Portis, which is a non-custodial wallet that got acquired by Shapeshift a few months ago. At the same time, I also joined the foundation of Collider Ventures, which is a $10 million fund located in Israel but invests worldwide. We invested in companies like The Graph, Nexus Mutual, Beam, Zengo, Hummingbot, IDEX, and some others. And the experience of basically working closely as a very active advisor with one company, and at the same time, basically working as a VC, as a venture capital, this is why we decided to create Collider Labs to replicate that idea into more companies. So let me share my screen and we'll dive into what is Collider Labs and what we're trying to bring to the world. So Collider Labs is basically an investor in residence position. And this is what we are trying to do. We are trying to help early stage companies. Usually it could be even super early stage companies from the inception, and to invest a little bit in the company and to be an active investor in residence mentor and to help them with our network of experts of Collider. So you probably think right now, okay, so this is another accelerator or this is another incubator. What's new here? So the idea with Collider Labs is that we are not bringing you guys, the company, to our accelerator. It's the opposite. We are joining your team. We are joining your company. So in an accelerator or incubator, you usually have a 3-month program together with a batch of other companies, and it's usually around 3-4 months. With Collider Labs, first of all, we don't have a time frame. We are going to work with you as long as you need us. That's the first. And second of all, we don't have an agenda. We usually sit together with the company, realize what's their OKRs, what's their needs. And let's say it's starting with raising funds. So we'll sit down, write down the first OKR, which is raising a round, and we'll sit together with the company and we'll do all the work hands-on together with the company. And then after we'll finalize with the round, we will move to the next item the company needs. So basically, we are adopting ourselves to the company and not the opposite. This is why we call it an investor in residence. The steps for basically the program for us is basically we are going to scout for you guys, for the interesting companies, interesting entrepreneurs, and we are going to invest up to 25K into every company. We are going to work only with 2 to 3 companies per quarter. So this is why we can be very hands-on and active with a specific company. And we are basically going to help you to raise a round. We are going to help you do those things you can see here. We are going to start with a competitive analysis. We are going to help you bring our macro view of the market as an investor to the table. We will do together the investor deck, the financial projection, and of course the product and UX, and through the tokenomics, which is super important, the business model, and basically every activity that the company needs in the phase of product market fit. This is where Collider Labs will help. So this is a little bit about the team. So you've heard about me. I want to present also Adam, Ofer, and Daniel, which are part of Collider Labs. So Adam used to be the venture partner of 500 Startups, which is basically the biggest accelerator in the world. And he is one of the founding directors of general partners of Collider Ventures. Ofer will introduce himself in a second, probably, and I'm assuming also Daniel. So this is the team that created the Collider Labs, and I would be happy if you ping us if you have any idea that you want to promote, any company that you want to share with us, or just keep in touch. This is my contact info. You can ping me. I'm available, and let me stop the screen sharing. And of course, another important thing, Collider Labs is part of Collider Ventures. So usually it's really coming from the same family. If we invest from Collider Labs, we are doing it mostly to de-risk for Collider Ventures and some other funds in our ecosystem. So ping us, and I'm going to leave my details on Twitter and also here, so you can contact us. Thank you, guys.
Thank you, Avishay. So next in line we have Terry Lam from Nuts Finance. He's the co-founder at Nuts. I've been in touch with you, I think in 2018, as you guys were starting. And it's great to have you here, and it's great to hear how you've progressed over the years. You come with a rich business in finance and in business. So yeah, the stage is yours.
Okay. So first of all, thank you guys for organizing the session. I've actually spoke with each one of you guys on separate occasions. Always good to catch up. So for the audience, just a little bit of background about myself. I started my career in the traditional financial services industry, coming from a ratings and analytics background. Actually, my first startup project was a foreign exchange trading project, and that was in 2016. Sold the business in 2018, and that sort of angled me into the blockchain/crypto space. So basically, during the last bull run, the peak of the bull run, and that's also when we met Ofer in Israel. So a lot has happened over the last 3 years, and what I'm going to do is I'm going to share a few slides about what we're working on at Nuts Finance. So just let me share my screen. Okay. Can everyone see? I guess I won't get a response.
Sorry, yes, I can see your screen.
Okay, cool. All right. Okay, so, all right, perfect. All right, so we're working on a project called ACBTC. And before I actually speak about ACBTC, you can see underneath that, we have the powered by Nuts Finance. So Nuts Finance is actually the development DAO behind the ACBTC project. And when me and my partner first started venturing in the blockchain space, we basically started Nuts Finance, and our mission is to leverage blockchain technology to, essentially bring efficiency to the traditional financial services workflows. So we started in 2018, basically trying to find different angles on ways to improve traditional financial services, especially from balance sheet / cash flow point of view. We spent 2019 building a middleware solution on top of Ethereum. Essentially, the middleware solution is to help the app builders to be able to create financial DApps more securely as well as efficiently. However, when we tried to launch that product, it actually the market response was not great. We felt that we haven't been picking up traction with the middleware platform, maybe because the product was a little bit too early for the market. So then we actually pivoted into building ACBTC in May of 2020, so roughly 6-7 months ago. So in short, ACBTC is another form of ERC20 BTC, except for the fact that ACBTC is designed specifically for usability. Okay, so I'm going to spend the next couple of minutes to talk about why we see this space, to have potential, as well as what are we actually doing with ACBTC. All right, so just throwing some numbers. I'm pretty sure everybody is aware of the current market cap of the crypto space versus BTC. However, I'm not sure. I think not a lot of people pay attention to how big is the DeFi space relative to the entire crypto space. So as a whole, so these numbers are from a few days ago, January 9th. The entire crypto space market cap is roughly 916 billion. BTC roughly makes up 70% at 600 billion. And the DeFi space makes up 20 billion. And then within the DeFi space, 5 billion is contributed from ERC20 BTC projects, such as WBTC, renBTC, HBTC, etc. So the key takeaway here is that the current size of the DeFi ecosystem is still very small. It only makes up 2.18% relative to the entire crypto space. And not to mention, I think we can all agree on the fact that the crypto space itself is relatively small compared to traditional asset classes like equities, fixed income, etc. So essentially, what I want to present here is that DeFi / the ERC20 BTC space, it's there's a lot of room for catching up. So let's dive in a little bit further into the ERC20 BTC space. I use the term Bitcoin at work. This is actually drawn from the DeFi post, the new page on DeFi post. Bitcoin at work. I like this term a lot because ultimately it's a good representation of how many people, how many Bitcoin holders are actually using their Bitcoin on Ethereum, whether it's through generating yields or engaging in options trading or lending them out or borrowing against them. Okay, so in terms of the Bitcoin at work sizing, right now, roughly there are 18.6 million circulating supply for native Bitcoin, and this number obviously it doesn't include all the lost or unrecoverable amount. Roughly 18.6 million circulating native Bitcoins, and right now, as of January 9th, roughly 150k ERC20 BTC on the Ethereum network. Okay, so this number is extremely small, only roughly 0.7% relative to the circulating supply. So what we did here at ACBTC and our thesis here at ACBTC is that we made an assumption. Given the development of the DeFi space, as well as the different innovation that's currently going on with decentralized financial applications, we made an assumption that roughly 20% of the circulating supply of Bitcoin will eventually move on to the Ethereum network due to the innovation, as well as the opportunities for yield. So that number itself is roughly makes up 3.7 million ERC20 BTCs on the Ethereum network. So as you can see, there's actually this is roughly 25 to 26 folds from our current situation today. So we feel that this is definitely the segment that ACBTC wants to or see the potential to to help grow in order for us to get to this number. Okay, so the current bottlenecks that we've also identified in the ERC20 BTC space is there's three. The first one is usability. Okay, so in a lot of the lending or lending pools or lending protocols, the requirement for over collateralization makes a lot of the native Bitcoin holders not wanting to actually enter the space because that the over collateralization is actually not a good use of their Bitcoins. The other issues that we observed is unsustainable yields. Okay, so previously there was the yield farming craze. Yes, the returns is high. However, it's not sustainable. The second issue that we've identified is concentration risk. So whether that is reliance on custodians or single liquidity channels for wrapping and unwrapping Bitcoins, this could be a potential risk with some of the ERC20 BTC projects. And then the third one is user friction. So the cost of wrapping and unwrapping, as well as the timeliness, this actually has even though I know a lot of projects are working specifically on this issue, we feel that there are still areas to improve on. So essentially what ACBTC is we are a single asset multi-protocol system. Okay, so here, as I mentioned earlier, ACBTC itself, we are a ERC20 BTC composite asset. Okay, what composite asset means is that it's made up of a basket of different versions of ERC20 BTCs. So right now, this basket contains WBTC as well as renBTC, meaning that WBTC holders or renBTC holders, they could directly mint ACBTC. So the next question is, what can I do with ACBTC? Why would I want to mint ACBTC? And that's the first issue that I mentioned just now, is usability. Okay, in terms of over collateralization, in terms of sustainable yields. So that's why we also, underneath the asset protocol in the ACBTC ecosystem, it's also made up of three different application / DeFi protocols. The first one being savings. Second, it's a swap protocol, and then the third one is a lending protocol. Okay, so ultimately, how we feel about ACBTC is we want to drive usability for the entire ERC20 BTC asset class. So in terms of swap, where users are able to swap between different ERC20 BTC in our ecosystem at a much cheaper cost. And then in terms of the saving strategies, because we are a multi-protocol system, there are much more avenues to generate fees. Therefore, we could actually subsidize users, or a portion of those fees can go towards the saving strategies. And then finally, our lending protocol is actually a hybrid It's a hybrid loan/option protocol that caters to borrowers or lenders and traders that wish to speculate on Bitcoin's short-term volatility. So just a closing statement, because ACBTC is a composite asset, we are actually uniting all the different kinds of ERC20 BTCs. We're actually working closely with renBTC, HBTC, OBTC, and via our application, you can see that we have yield generating strategies for the different kinds of ERC20 BTC. So I know I sort of rambled on a little bit and I'm a little bit over time. I've left information here about our project, and I'm sure there's going to be more questions coming up for the panel. So yeah, that's all for now.
Thank you so much, Terry. You've made quite a progress in the past 2 years.
Yeah, thank you.
Yeah. So our next speaker up is Loong Wang. Loong is the CTO of Ren Protocol. Ren was founded, I think, also in, was it late 2017 or early 2018, somewhere around those times? Correct me if I'm wrong. And you've managed to raise $30 something million, $34 million in the ICO. And it's one of the important projects in the ecosystem, bringing BTC and other coins onto Ethereum's DeFi. So, Loong, we haven't spoken in the past, I believe, but it's exciting to have you here, and I'm glad for this opportunity. Go ahead.
Yeah, thanks for having me. Let me quickly share my screen. Yeah, so my name is Loong. I'm the Chief Technology Officer at the Ren Project. And what we're building at the Ren Project is a network that we call renVM, which is a universal cross-chain interoperability platform. And I'll talk a little bit about that and sort of how renVM works. And I'll also sort of put it in the context of Bitcoin specifically and also DeFi. So when I say that renVM is about universal cross-chain interoperability, I want to talk a little bit about what exactly that means. So there's a bunch of different techniques for interoperability. You can think of oracles as a form of interoperability. There's atomic swaps that use hash-time lock contracts, and a whole host of other things as well. But one of the things that you notice about these interoperability systems is that they're useful for one specific use case, and that's about it. And often they're also only useful for certain classes of assets. They're not generally useful across the board. So when I talk about universal interoperability, what I mean is that we need an interoperability protocol that can work with any asset, and it can also support any chain. So whether you want to move your Bitcoin to Ethereum, Binance Smart Chain, Avalanche, Polkadot, whatever it is, that should work. But also, and perhaps most importantly, it should work for any application. So it doesn't matter whether you want to swap, whether you want to lend, or what you want to do, the same protocol should work. And this is really important when it comes to usability, because you want a interoperability system that's going to not only work for the applications that we can see today, but also the applications that we aren't even aware of today that might exist in the future. So I'll talk a little bit about how renVM works and give a whirlwind tour of the underlying technology. So at the core of renVM, there's a thing that we call the Arzadel multi-party computation algorithm. And what this algorithm does is it allows multiple players or nodes or parties, whatever you want to call them, to come together and perform some kind of computation in secret. And this means that they don't know what data they're working over when they do this, but they can sort of cross-verify and still make sure that the computation is correct. And what we specifically use this algorithm for is the generation and management of private keys. So if you can generate a private key in secret such that none of the nodes involved in the computation are aware of the private key, and you can use that private key to sign things without anyone being able to see the private key during that process, then you can essentially create a decentralized custodian of your assets. Now, on top of that, we layer a majority consensus algorithm so that the nodes can't go ahead and decide to use this private key by themselves. They need the majority from the network. And with this, we provide the properties of majority safety and liveliness. So this means that if your nodes, if the majority of them in the network are behaving themselves, which they're well incentivized to do, then the system is guaranteed to be safe and it's guaranteed to be available. These are all the classic good things that you expect from a blockchain, and they follow the same properties as chains like Tendermint, for example. So the nodes are required to put up a good behavior bond in Ren, and this acts as a disincentive for them to misbehave. But even if they wanted to misbehave, the nodes are shuffled every day. So we kind of break our network down into little shards, and those shards are shuffled every single day. And every time they're shuffled, we move the assets between them. And this makes it very hard for an adversary to attempt to bribe any group of nodes, even if they become aware of who those nodes are. So we launched this system onto mainnet 8 months ago. And since then, we've done $2 billion in volume in cross-chain transactions. And we have $500 million in total locked value. We also have more than 1,700 nodes pairing the network. So this makes it one of the largest production networks in crypto at the moment. And we support 7 different assets across 2 different chains. But this is growing all the time. Every quarter, we release new assets and new chains to support, with the eventual goal of supporting every major asset and chain out there. But of course, we're all here to talk about Bitcoin. And the reality is, this is not an exaggeration. 99%, in fact, more than 99% of the renVM is for Bitcoin. And specifically, it's for moving Bitcoin onto Ethereum. So the vast majority of interoperability is currently used for putting Bitcoin onto Ethereum and bringing it back. Terry talked about this a little bit before, but there's about $5 billion worth of Bitcoin on Ethereum right now in one form or another, the giant being WBTC with 3.8 billion. And this is actually a project that was co-founded by the Ren team alongside BitGo and Kyber. And the second biggest is renBTC at 0.5 billion. And the rest of it is distributed amongst 8 or more different BTC on Ethereum projects. And all of these tokens, all of these tokenized representations of Bitcoin have more or less the same goal, which is to give you a version of Bitcoin that you can use in the Ethereum ecosystem. So what are people actually doing with this Bitcoin when it gets to Ethereum? Well, speaking about renBT specifically, we have over $200 million of it is sitting on Curve, which is a stablecoin exchange or stable exchange where assets of the same type that are meant to be the same price can be exchanged more or less one-to-one with each other. So renBTC can be swapped with synthetic BTC or WBTC. And at the moment, they're earning about a 5% APY. There's also $40 million on KeepItDAO, which is a sort of novel kind of protocol that lets you tap into the arbitrage and liquidations that happen in DeFi, where they're earning about 25% APY. And we have the rest is distributed across a whole bunch of different applications that number more than a dozen. And we've got some interesting projects in there, including OpenDAO, I think there's 23 million. We're supported by MakerDAO, where there's a debt ceiling of 2 million. So this Bitcoin is really is getting put to use quite thoroughly in the DeFi ecosystem. It's not really just sitting on exchanges where it's getting swapped. People are actually actively trying to seek yield. So there's a whole number of different places where you can put your Bitcoin to work. And I really do like that phrase as well, in the DeFi ecosystem on Ethereum. This slide is just sort of to show all the different places that you can really use the Bitcoin right now, where you can earn yield without having to think or worry about a middleman, which is kind of the point of crypto. So with Bitcoin on Ethereum, now you're able to earn trustless and permissionless APY, which is not something you can do with Bitcoin without Ethereum at the moment. It's not something you can do with WBTC either, because you're required to trust the underlying custodian, which is BitGo. But with tokenized Bitcoins like renBTC, you're able to tap into these trustless and permissionless DeFi ecosystems with a trustless and permissionless version of Bitcoin. And this allows you to tap into liquidity pools, lending, arbitrage, and liquidations. But you can also earn Bitcoin, not just by participating in those parts of DeFi, but by participating in renVM itself. So those nodes that run renVM actually earn Bitcoin for every Bitcoin that they move back and forth. And to date, we've paid out over more than $2 million, with 1 million of that happening in the last month, because we're seeing some amazing growth recently. And I just want to finish on a thought, which is that right now, Ethereum really is the heart and home of DeFi. I don't think anyone's going to contest that. But the race is changing and others are joining. And soon, I think there will be new applications that become available and new and novel ways to use your Bitcoin across various chains. I recently talked with a project that was looking at bouncing Bitcoin through multiple chains, 3 or 4 chains simultaneously to aggregate yield. And this is going to be a really exciting use case. And to achieve that, we really need universal interoperability and a way to move these assets across any chain at any time in any quantity. And that's exactly what RenVM provides. So if anyone wants to learn a little bit more about that, we're available in all the usual places. So come check us out on Telegram, follow us on Twitter, or go check out our GitHub if you're a developer and take a look at our code. Thanks, guys. That's me.
Thank you, Loong. It's been a pleasure to learn more about what you're doing at renBTC, and actually, I guess I expected that BTC would be the largest use case. So from one BTC to another BTC, we have with us Edan Yago. Edan is a fellow Bitcoin OG. We've known each other since I think 2013 or 2014 in the space. He also is a fellow Free Private Cities, what should I call it, fan, ambassador, activist. Edan has always had this ability to spot the trends and had this vision to a more decentralized world, which I really like. And without further ado, give the floor to Edan. Unmute yourself. There's a little button.
Hi, nice to be here. It's great to be on such a panel with such interesting projects and speakers. So right now I'm working on a project called Sovryn, and I'll describe Sovryn in a moment. But before I get into what Sovryn is, I think a little bit of background on me. I've been in the Bitcoin space for about 10 years now. I've started a number of projects and companies, mostly focused around trying to get Bitcoin into the hands of the people who need it most. So working on adoption, and in particular adoption in the developing world through remittance companies. The reason I was initially attracted to Bitcoin is because what Bitcoin does is it provides the first truly sovereign money that people can control and own themselves, move anywhere in the world without having to need any type of intermediary. And money is very, very important because it is the way we protect ourselves from all of the things that can go wrong, and the way that we achieve for ourselves, for our families, for our friends, all of the things that we would love to achieve. And so the degree to which we are free with our money is really the degree to which we are free at all. So an obvious extension of that is DeFi. I think in a way it's kind of ridiculous to have Bitcoin without having DeFi. Bitcoin is a decentralized sovereign monetary system, and what currently the situation is that you have this amazing sovereign asset, but to use it you need to give up that sovereignty and place it in centralized exchanges, centralized lending platforms, just centralized financial services generally. What DeFi allows us to do is to extend the promise of Bitcoin into the financial space, into the economic space, and allow you to start using your Bitcoin in ways which are almost as permissionless, almost as uncensorable as Bitcoin itself. And so we've been looking at the DeFi space growing. It's been an amazing process to watch, and really the fulfillment of many of my dreams for where the crypto space could go. But at the same time, this deep pool of liquidity, 90% of all of the liquidity in the crypto industry is in Bitcoin. It is the reserve asset. It is the center of gravity for everything that happened. It has, for the most part, been kept out of DeFi. And even in circumstances where you can kind of take a wrapped Bitcoin and use it with a DeFi protocol, that wrapped Bitcoin itself is centralized. And so you're still cut out of DeFi. And so with Sovryn, what we have been working to do is to provide a way in which we can bring a Bitcoin to DeFi and bring DeFi to Bitcoin. And so we've built a platform which is backed, secured by Bitcoin proof of work, where you can effectively have a side chain to Bitcoin, which also acts as the Bitcoin shard for Ethereum and allows you to use Bitcoin as the native asset to to do all of the things that you'd want to do with your Bitcoin. So right now, and I'll show the platform briefly, despite the fact that we've only just recently launched and we're still in alpha, we have a extremely, hold on, sorry. Can you guys see my screen? Okay, awesome. So we've got a very large community of developers who have been working on it, because I think a lot of people feel this is very important. So progress has been quite fast. Right now, the platform allows, among other things, the ability to perform swaps, so the ability to trade at spot prices between Bitcoin and other assets. So for example, Dollar on Chain, which is a Bitcoin-backed stablecoin, USDT, BPRO, which is leveraged Bitcoin. You can also trade with leverage. So we right now can offer up to 2, 4, 5x the ability to go short or long, which means that even if you are like me and don't have more money with which to buy Bitcoin, you can still buy more Bitcoin using your Bitcoin. So if you're really into Bitcoin, you can double down here in a permissionless way. The protocol also allows lending and borrowing, so you can continue to stack sats with your Bitcoin without having to deposit it into a centralized regulated custodian. The entire system is completely permissionless, completely pseudonymous, no KYC, and is integrated now already with a bridge to Ethereum, has a base asset which is Bitcoin, so you pay fees in Bitcoin itself, and you do that by moving Bitcoin into the system. And we're going to be looking to introduce even tighter integrations with Ethereum and other chains, and improve on an ongoing basis the speed and convenience with which you're able to transfer Bitcoin into the system. So right now you still need to transfer your Bitcoin into a Web3 wallet, but we're looking to integrate this with most Bitcoin wallets, so that you'll be able to use the system natively from the wallets that you're most familiar with your Bitcoin. And broadly, once you have lending and trading and the ability to make conditional payments, those are the core primitives of pretty much every single financial transaction. And so we already have people who are working on developing on the system things like perpetual swaps, futures, options, and even much larger potential things like mortgages and pension systems. And so, we've only been, we launched the system on testnet in August, and have been testing it extensively. We now have several thousand users on a daily basis. And so we still consider the system in alpha. I think Bitcoiners are very conservative when it comes to security, but it's really been an incredible thing to watch both the system grow and the community grow.
All right. Thank you, Edan. So don't go anywhere, because up next we have our panel, and I would like to invite Terry and Loong to open up their mic and cameras. There we go. I see things are happening. Good. So yeah, thank you everybody. And so the first question I would like to ask you, and this is something that I'm hearing a lot, is newcomers come to the space and they hear about they heard about Bitcoin, and now they hear about DeFi, and they ask me, okay, so what is this DeFi thing? That's one, and then the other is, how do I make money from it? So I mean, I have my answer, but I would like to know what you guys would answer. So go ahead, Loong.
Sure. Well, I mean, I think I think Edan did a great job of kind of explaining that. What is DeFi in comparison to Bitcoin? If Bitcoin is your money system, money's only really half of the story. No, it's not even half of the story. What you do with that money is the most important thing. How do you transfer it to someone? Okay, that's one step. But how do you earn interest on it? everyone's familiar with taking money and putting it in a bank account and then it earns interest. If you're a little bit more pro than that, maybe you're going to be seeking those forms of yield yourself. You're trading it against other assets. You're lending it out. But the whole point of Bitcoin is to do this without sovereignty. And at the moment, if you want to do that with Bitcoin, you have to kind of give that back up. And so I think DeFi is all about taking the same principles of Bitcoin, which is cutting out middlemen, being sovereign of your own money, but enabling those other financial pieces of infrastructure. So being able to earn interest, being able to put your money to work.
And Terry, how would you make money with that? What would you tell someone who's a newcomer? Like, what do I do? I want to make money out of DeFi. I have some money in my bank. What's this DeFi?
Yeah. So I think Loong wraps it up pretty nicely in terms of people can actually take sovereign of their own Bitcoin in DeFi. One thing that I would add to it, because first of all, ACPTC is mainly designed around usability. So a lot of people are asking about how do I actually use my Bitcoin now with our project. And to them, the reason why our ACPTC is a multi-protocol is very similar to what Edan just said. Payment, lending, as well as savings. These are the core pillars to the financial services infrastructure. And once these pillars are set up, you could literally do different types of whether it's yield generation or basically putting your assets to work. So to somebody that's new to the Bitcoin space, very simple. The recommendation I would give them is right now, if you just buy Bitcoin, you hold, you might be able to gain on the capital appreciation. However, if you're a little bit more savvy, then definitely look into the decentralized finance space, where there are simple protocols where you could just deposit those ERC20 BTCs and you could generate a return on them. So, but the first thing obviously is I would tell them is you have to be familiar with interacting with decentralized finance protocols if ownership of the Bitcoins matters to you. And so that's how I would summarize.
Okay, so Edan, tell me, where would you tell those people to learn about it? Like, they say, okay, I get it. You have these financial instruments that I'm used to in the regular world, but decentralized. All right. So where do I learn about it? Which social media accounts should I follow? What are the common pitfalls? How do I avoid the scams?
It's difficult because it's a huge space with so many projects and so many new things coming all the time. And a lot of the time, projects will describe what they're doing as sort of one thing, when in actuality, that's more of their aspiration, and their reality is different. So it's very easy to get confused. And I would say that makes sense. Sovereignty is a double-edged sword, right? There's nobody who's looking after you if you're taking responsibility for yourself. So that means you're taking responsibility for your future, but it also means that you're taking responsibility for the fact that you might make mistakes. So I would say that probably sovereignty, freedom, is a discipline. It's a practice. It's something that you build over time as a ladder. Most people start out just by doing research, and I think that's a good idea. I would then suggest starting small. Most people, they'll go to something like Coinbase or an exchange, they'll buy some Bitcoin, but they'll keep it on the exchange. Then they need to learn a little bit more how to withdraw it, hold it in their own wallet. And if you're already at the point that you're managing your own funds in a self-sovereign wallet, then I think it's a good opportunity to start thinking to yourself, all right, with regular money, what I would try and do is earn some interest. So that's one of the more conservative things that you can do. So to lend your Bitcoin in a decentralized platform, like, for example, Sovryn, is a good way to kind of dip your toe into the water. I wouldn't do what a lot of people do, which is go immediately to day trading at 100x leverage. I would start small, mostly keep your funds in your wallet, deposit a little bit of them in the system, start earning some interest, learn how it works, and then as you become more familiar, you can start to become a little bit more adventurous.
Do you guys though have like an account that you would follow, like a Twitter handle that you would say, follow this guy? He tweets a lot about Bitcoin, about DeFi. Sorry,
I'd say DeFi Dad.
DeFi Dad.
Yeah, I love his Twitter account.
Okay.
He does a lot of video tutorials that kind of walk you through every step. He does a lot of podcasts with the different founders of these different projects, so you can learn a little bit about them. But yeah, I think that Edan is absolutely right. No matter what you do, start small. Don't risk it all in one go.
Yeah, and I think if you are going to be following people or looking for information, the best tip that I think I could give is try to find someone like Bitcoin Dad, and then find out who they're arguing with on Twitter and follow those people too, because you want to get both sides of the views.
Yeah, that's a good tip. That's a good tip. So like when all of you are in the DeFi space, and you all give kind of different ways to interact for Bitcoin holders and other coins. So how would you? What are the differences between the different projects that each one of you is working on, and how does it differ from the user's perspective? So let's start with Edan. When somebody buys Bitcoin and then he wants to interact with your project, right? He wants to lend or borrow or whatever. So what are the steps and what are the considerations, with security and the cost, etc.
Right. So most DeFi today is built on a protocol called Ethereum. And ideally, we wouldn't even have a world where it mattered where the project is built, right? I mean, when you go to a website, you don't know where the servers are hosted. It doesn't really matter. But because we are a new industry, it still does matter a little bit. So most projects are built on Ethereum. If you are interested in Bitcoin, we provide through Sovryn an interesting alternative, because Sovryn is integrated with Ethereum, but is not built or secured by Ethereum, which means that when you are depositing your Bitcoin to Sovryn and using your Bitcoin on Sovryn, the fees that you are paying are in Bitcoin, so you don't need another token like Ethereum. The fees are much, much lower. Right now, they're about 30 times lower, and we expect them to be about 150 times lower by around March. And that's because we're not using the very expensive system that Ethereum uses to secure itself, but instead we are using Bitcoin proof of work to secure the system, which actually ends up being much cheaper. And so I think those are the two big differences. You don't need a different type of asset. You don't need to understand this stuff, any other asset besides Bitcoin, which simplifies things greatly. And you know that while you're holding Bitcoin, it continues to be secured by the Bitcoin network. If you transfer your Bitcoin to a different network, you no longer have the assurances of Bitcoin proof of work.
Mm-hmm. And so how does it work with renBTC, for example? If I start with Bitcoin, what do I do next? I go to your website. How does it work?
So, RenVM is much like any blockchain, so it doesn't have a website per se. There's any number of websites that you can go to interact with RenVM and take your Bitcoin onto Ethereum or any other chain that we support. So I think one of the differences between renBTC and, let's say, Sovryn is that RenVM is not aiming to be a standalone chain. It's aiming to bridge Bitcoin to existing chains. And this comes with a lot of advantages, but also disadvantages. So one big disadvantage is that it's not secured by the Bitcoin proof of work. So you're relying on the security of the renVM network, and you're relying on the security of whatever the other chain that you're going to. So if you're sending your Bitcoin to Ethereum, fundamentally, you're going to be less secure than BTC, because you're going to have all of the normal risks of Bitcoin plus all of the normal risks of renVM plus all of the normal risks of Ethereum. So that's the first thing to be aware of. We've actually renVM is flexible enough and powerful enough such that you don't actually need another asset when you go to Ethereum. That's one of the big goals that we set out to achieve, and we have in many ways. So you can actually go and deposit your Bitcoin into a financial application on Ethereum like Curve without needing Ethereum at all. But you're still paying the fees. It's just that you're paying them in Bitcoin, and underneath the hood, they're getting automatically swapped into ETH and paying the gas fees in that way. One of the advantages that you're really getting, though, is you're getting direct access to these existing ecosystems. So, the Ethereum ecosystem is very big. The Binance Smart Chain ecosystem is very much beginning to grow. We've got Polkadot that's now out, and you've got Avalanche as well coming up. And in the future, I think a lot of these different chains have various advantages and disadvantages. They'll have various applications that are possible on them because of those advantages and disadvantages, and you'll be able to use whichever one you want. So I think one of the big wins with renVM is that you really get optionality. You get to choose where you want your Bitcoin to be, what security trade-offs you're willing to take on the way, and you still get sort of the flexibility and user experience of not having to have juggle multiple tokens simultaneously.
So the user will go to one of the websites. Eventually, right? Users interact with the web through websites. So he will go to a website that has
They'll say, I want to do this. So let's take Curve Finance as an example. You go to the Curve Finance website. You say, I want to deposit something into the stable pool. Curve says, great. Here's a Bitcoin address. You can verify that address, and then you deposit your Bitcoin into it, and then your Bitcoin appears in Curve Finance, and it's earning yield from fees.
I see. And okay, and how does it? And I think this is kind of similar also to ACBTC, Terry, with nuts. How does that work? Sort of similarly.
Yeah. So the workflow
you also integrated Ren, right?
Yes, correct. So the workflow that Loong just described just now with Curve works perfectly on the ACBTC system as well. So a user that has Bitcoin can just go onto the ACBTC system, the Mint interface, and then generate an address to deposit the Bitcoin, and that channel is.
Bye, Terry. Terry, you were logged out for a second. So you were saying a user goes to ACBTC, deposits Bitcoin, and where does he deposit? Is that address controlled by who?
So that actually goes through renVM. So the that integration that process actually uses what the Ren project team has developed. So you were asking about the differentiation between the different ERC20 BTC projects or Bitcoin DeFi projects. I guess the biggest differentiator for us is that we are actually supporting all different versions of ERC20 BTCs because ACBTC is a composite index basically. So right now, underneath this composite basket, it has WBTC as well as renBTC, but we're also looking to add more different versions of ERC20 BTCs into this basket. So from a user standpoint, I guess for them to, at this stage, for them to use ACBTC, they would need to be familiar with getting ERC20 BTCs to begin with. Okay, they need to be familiarized with that concept. And then I think the Ren team has done a really fantastic job in making that bridge over onto Ethereum that empowers the users to be able to interact with protocols like, for example, ACBTC or Curve or others to generate that yield.
But they can come to your website with Bitcoin on the Bitcoin network and end up with ACBTC, which is, you say
Correct.
that behind the scenes you have it backed by WBTC and renBTC and soon by others?
Others, yes, correct.
Okay, interesting. I like the approach, and then you earn yield on your account if you want to deposit and lend it, or on your website. Sorry, and you manage it behind the scenes to distribute it to the different protocols.
Correct. So it's all done via smart contract, the ACBTCs that gets, so user after they, so there's two ways. User that has ACBTC, they could deposit into the ACBTC strategy. So that in itself would be able to generate a yield, and that yield ultimately comes from the other protocols where we charge a fee on. So for example, redemption fees. So if a user redeems ACBTC, there's a small fee that we charge, and that fees goes is contributed to the ACBTC strategy. Also, for example, a swap fee. So if a user wants to swap between WBTC and renBTC, there's also a swap fee that we collect, and that fee also goes back to the users that have saved their ACBTC. So that's one way. The other way is if somebody is actually is depositing directly using, for example, WBTC or renBTC, we actually put those Bitcoin into other protocols. So for example, Curve is one of them that we use extensively. So we actually do that moving of the assets on behalf of the users and help them generate that yield.
And another thing that I myself experienced, I wanted to test a few of those protocols with small amounts, but I mean, not too small. I think it was a few hundreds of dollars, or things that I would have expected the protocols to allow, but I end up profiting at the end. But then when I wanted to exit, then all my profits were on fees. You got to pay $40 to get your money back on some of the protocols, and it's not just, it's the fees on the Ethereum network, but also the more complicated smart contract structure, right? That compounds it. And I guess Edan would say that that's one difference, right, with between the two. But still Ethereum has like the vast majority of DeFi projects, and so would you say that Ethereum is a playground for rich people, or how are projects going to solve that? Maybe Loong, because he's smiling.
It's certainly is a playground for richer people at this point. I think it really depends on what you want to do. If you're coming in to make a quick buck and you want to deposit your money, earn your 50% APY. I think in some places we've even seen hundreds or even thousands % of APY, but you want to do that for a couple of days and then you want to shift your money somewhere else and chase the latest big thing. Not talking about all the risks associated with that, just the underlying fees that you're incurring from Ethereum. I think I tried to do a trade today myself, actually, and I think the fee was like $200 because of gas fees. And I was just like, no, I'm not doing this. It's not worth it.
That's incredible.
And so, when you take that into account, you really have to be using large sums of money for that APY to cover your costs. Yeah. I think Ethereum, it's definitely got a plan, but I think they're going to have to execute on that plan pretty quickly if they want to keep up the traction that they have. Obviously ETH 2.0 has a lot of ideas around how to help lower the gas fees, how to make it more usable and more affordable. But I think, I do think it's not something that necessarily gets enough attention. We talk about speed and throughput a lot when we talk about different chains, but the underlying gas fees are something that's really, really important. Because if you do want everyone to have access to these ecosystems, you need to make sure they're affordable for everyone. And that's, I think, one thing that we're really missing the mark on right now in DeFi.
Yeah, I think Ethereum has a very inclusive culture, but ironically has become hyper-exclusive for people to actually use it. It's one of the reasons that we are building on what is basically a layer 2 to both Bitcoin and Ethereum. I don't know if you'll be able to see it. I'll try. If I share my screen, you can see I've just created a transaction, and so the transaction is pending my approval, and you can see that the fee is so small that it's currently less than a cent. So the system is showing it as $0 USD, which is hundreds of times cheaper than what you would be getting on Ethereum. And effectively, the reason we think this is so important is because we believe that freedom and sovereignty isn't something that only technically savvy people or rich people should have access to. And yeah, so I mean, there was a transaction I created to put in a trade for 0.01 Bitcoin. The thing I wanted to demonstrate is that you can put in very, very small trade amounts. So it should be
transaction throughput increases. So I mean, like one of the big problems with Ethereum is that there's lots of people trying to use it right now because we're in a very volatile bull market. Lots of people are trying to use it, and that's really what inflates the gas prices. Obviously, that less when you've got more block space. But,
right. I don't think there's going to ever be an issue with block space. And the reason is, even with Ethereum, I think there are solutions that are being developed. The layer 2 solutions, which basically take the computation off of Ethereum or off of Bitcoin, are two primary types. I would actually say that part of what renVM are doing is they represent one kind of scaling solution, which is bridges. So by taking an asset from Bitcoin, for example, to other chains, you can effectively scale the whole ecosystem by moving that computational complexity across different chains. And then another very important scaling technology is rollups. And so we are going to be migrating our system to a rollup, which will be integrated with both Bitcoin and Ethereum. And so that's why we think that soon the fees will be so low that there won't be any point in even metering them.
Would you say there are security concerns, though, over that? Between doing it on-chain and everything, is verified by the miners, which are, a very big network.
Some rollups have introduced zero security risk.
Yeah, so that's the fantastic thing about rollups is that they, with relatively few trade-offs, allow you to remove the computation from the chain, but still have the same security assurances of the chain. And we're extremely interested in any type of tool which is going to make it easier for users to use these layer 2 systems and to have greater degrees of interoperability. So I'd love to actually, Loong, talk to you about maybe integrating with Ren.
Always.
Yay! We made a shidduch. Shidduch is matchmaking for non-Yiddish speakers. Good. So yeah, it's really interesting how the space is evolving, and I think one core thing is that we all should keep in mind as players in the space is how do we make the user experience great? You wanna bring everyone. You wanna have this ecosystem very inclusive. No matter their technical abilities or their tech savviness, the tech savvy, right? Or how wealthy they are. But you also want to keep them secure, because if they get hacked, and it doesn't matter why, whether it's someone had, whether it was a phishing attempt and only they got hacked and it's their fault, or whether it's a system breakdown, the experience is still bad, and it would make people, not use this new rails that we are trying to build, right? Which, I mean, we're trying to compete with banks and with very large institutions here, which give, I mean, I don't know if good user experience, but they give the user experience that we're all used to, right? So, and I think we can do much, much better and hold ourselves to a much higher standard. So yeah, that's something really important that we all should keep in mind, and that's kind of my motivation in, talking about it, asking those questions. And I'm really, really excited to see solutions for scaling. I really hope that the layer 2 solutions will allow for very large volume at cheap transaction costs with good enough security, or with very high security. Right. So let's see. Where should we come from this place? Maybe let's dive a little bit deeper on the security side. What would be your recommendation to securing yourself? How do you avoid the different hacks and exploits in the ecosystem? Any volunteers to be the first?
This is a very difficult question. There's any system has potential vulnerabilities, and as systems become more interoperable and more complex, they become even more vulnerable. And so sometimes systems can get hacked, or there could be bugs in systems. This happens to banks, it happens to the military, it happens to Congress, and it happens to DeFi projects as well. The advantage that DeFi projects have is that they are open source and their code is available to everyone, which you'd think would make you more vulnerable, but actually, because everyone can see what the system is, and because the open source technology often gets reused again and again in different projects, you get many, many, many different eyes on the code. And this is the reason that the most secure piece of technology ever designed by humankind is open source. It's Bitcoin. Bitcoin's never been hacked. So I think for most users, the biggest risks are actually where they're, it's not the DeFi systems, but it's the centralized systems that they're using or their own wallets. When I got into Bitcoin early, I should be much wealthier than I am, like pretty much everyone who got into Bitcoin early. But securing your Bitcoin at the time was hard, and we didn't know what we were doing. And so there's millions of Bitcoin that have been lost because we didn't properly secure our wallets. It's become easier, and there are today hardware wallets like Trezor or Ledger, and multi-sig wallets like Casa, which make it much easier. And in fact, one of the big advantages of Bitcoin is multi-sig, which Ethereum doesn't have in quite the same way, which allows you to split your keys up and have the same account managed by multiple different keys. Which really helps regular people secure their funds. So
Shamir secret sharing would give something that is close.
So there's Shamir secret that it's a form of threshold signature scheme, which I think is a little bit similar to the MPC that Ren are using. The beauty and Ethereum has sort of multi-sig smart contracts, things like Gnosis Safe, but there's basically no competition out there, I think, for the elegance and the deep integration that multi-sig has with Bitcoin in basically any other chain. It really does make securing Bitcoin easier than any other asset.
Mm-hmm. I'll add that by just saying that because the multi-sig concept is built right into Bitcoin fundamentally, it's just standard. Whereas the issue with Ethereum is that it's only implemented as so far as the fact that a smart contract can implement anything. And there are so many different standards out there for how multi-sigs work. And you could be very familiar with one type of multi-sig and then move yourself to a new type of multi-sig and make a mistake that locks your funds up forever or makes things insecure. And the same is true of if you use MPC technology. That's not fundamentally built into Bitcoin or Ethereum. So you're having to find your own standards and find your own tools and re-audit them and sort of check that they're open source and make sure that the community generally agrees that this technology is safe.
And how does it affect your user experience? Using, for you're using MPC and generally taking the security considerations. How does it affect it?
Yeah, I mean, we have had to develop our MPC code very slowly and very methodically. We've built multiple implementations that work side by side to check that they actually match, and that if a bug exists in one, it probably doesn't exist in both if they're written by different people in different programming languages at different times. We've had the specification audited. We've had the implementation audited. At the end of the day, we've also rolled it out very slowly. You can never perfect it, and the best way to battle test something or to find bugs is to actually put it out into the wild and get real world usage, because you see how people are using it. We started our launch in a very controlled way so that we could actually recover funds for users, because we knew that there would be user mistakes where the system performs perfectly, but a user makes mistakes and transfers money to the wrong place or misunderstands something about the user flow. And so I think that's an important part of any project launching. I think it's critical that they go through a two-phase process, where in the first phase, there's some controlled level of administration that the team has the ability to do, which obviously makes the system more trusted, but then it progresses into something that's less trusted over time. Because if you jump straight into the decentralized waters where you have zero control over the platform and then someone makes a mistake, well, their money's gone for good. And that can really impact people. It can be an insane move to put your users through that risk at some point.
Loong, can I ask, out of curiosity, I'd like to understand what is the status of the MPC rollout right now, because I'd heard that you guys were using multisig and that you were moving to MPC, and it's not clear to me, and I'm sure to other people as well.
Yeah, we've actually been using MPC from the very start, but we've done it in such a way that the nodes that run the MPC are distributed amongst our team. So no one has access to all of the nodes simultaneously. But obviously still within our team, it's a small community of people that have that control. So at the moment, today, we're rolling that out now to a broader audience of DeFi projects that actually use renVM in production because they're well incentivized to behave. And that's sort of a second stage where it's outside the control of our team, but it's still controlled by a small group of people who are well incentivized to keep their users safe and to keep the funds safe. And then the final stage is to go out to the whole community simultaneously, and then that's when it's sort of fully decentralized. So we're now in this transition period where we're going from that first stage to the second stage.
Mm-hmm. Good luck on that. Don't fail the decentralized stage. I heard that it's bad for user experience. Terry, in which stage are you guys? Are you in the still more trusted and controlled stage, or you're already in the fully decentralized and trusted state?
So I think we're in between. In terms of the protocol, it's fully open source. However, we haven't set up the governance system for the governance structure for the system yet. So I would say we're sort of in between. And I think it's absolutely crucial for us to have a bedrock that's very stable in order for us to introduce the governance structure for the system. Before that, I would say it's still relatively controlled in terms of how the system should be designed as well as implemented. But from the product standpoint, it's permissionless. It's open source.
And do you have the ability to freeze assets or cancel transactions, stuff like that?
No.
Okay. And Yago, where are you on that with Sovryn? Like how?
We're in a very scary phase right now because we're going to be, by the end of this week, fully decentralized system, which means that we will no longer have control over anything. So our baby is going out into the world and is going to make all the mistakes a teenager makes, and we're not going to be able to. So we've constructed our system in such a way that the stakeholders will be able to intervene only to the benefit of users. So there's no way that the system can censor any transaction or roll back transactions or steal users' funds or confiscate or freeze transactions or anything. But what we can do is we can continue to develop additional features for the system, which can get voted into the system. If there are user losses, we could potentially choose to, so there's an insurance fund in the system to cover user losses with that insurance fund. And so we've taken, I think, a pretty dramatic, a pretty hardcore view on decentralization in relation to most other DeFi projects. Some DeFi projects really started out of the gate extremely decentralized, like Uniswap is probably the best example of that. We're not as we've started doing testing in a state, and we launched the mainnet in a state where it wasn't fully decentralized. But by the time we speak again, next week, the system will be fully decentralized in a way that I think most DeFi still isn't.
I see. And what would it take for you to make it even more decentralized, and what does that mean?
Well, so I think I think decentralization is a bit of a misleading word. I don't really care about decentralization. I don't think anyone else does as sort of like a goal. The goal is censorship resistance, neutrality of the system, making sure it can't be manipulated by any group that's in power, that it can't be shut down by authorities, etc. So I think from the Sovryn is very far along that line, but it's not going to be as far along the line as, for example, Bitcoin. Bitcoin is a very powerful vetocracy, which means that almost any group has the ability to veto, any minority group has the ability to veto the decisions of any other group. So miners can't make decisions because they can be vetoed by users. Users can't make the decisions because they can be vetoed by miners. Node operators can veto users. Everyone can veto everyone. And so as a result, no changes can be introduced to the system, and the system keeps humming along like a law of nature, the same yesterday as it will be tomorrow. Sovryn is designed to evolve and change and to be more of an application. And so it has what we call like a bitocracy. It has a sort of governance system backed by the blockchain itself, which means that it can change. And it means that the stakeholders in the system have more influence, more obvious or direct influence than anyone in the Bitcoin world. But at the same time, there's extreme limits. So if you're a user, for example, and you deposit your funds and the system is going to change at some point in the future, it can't change immediately, even if all of the stakeholders decide to change it immediately, which means that you can take your sweet time to withdraw your funds from the system if you don't like the direction it's going in. So there's never a way that the system can take away your sovereignty.
Okay.
An important point there as well is that like the moment that you want a system to change in any way, shape, or form, at some level you have to hand that over to a human, right? Even if it's algorithmically done, you've assumed the human that designed that algorithm did a good job, and that there's not some weird edge case that can manipulate the algorithm somehow. And so the moment you introduce any kind of governance, even if it's a nice majority where you say, okay, well, 67% of people that use the system have to be in favor of this change, and we're going to delay the change by a month to make sure that anyone who doesn't agree with it has time to exit the system. People can be manipulated. People can be manipulated in many different forms. It's only as expensive to hack someone's wallet as it is to buy a wrench. So I think these things are fundamentally at odds. A system that can change and evolve and a system that is resistant to manipulation, they're at odds. Yeah, so you kind of have to choose which one you want. And I think it's important that our base layers choose to be unmanipulatable and that our application layers choose to be evolvable. I think that seems to be the right trade-off, to me at least.
Yeah, it's a good distinction. And I'd say that it's also important to have a variety. So it's good to have all of you and many other projects working on solving all these problems in different ways, different angles, by different teams. I think this is something that is very powerful and that we have been missing in traditional finance, right? I mean, fintech has been limited to what regulators allow it to be.
I think there's something interesting about the traditional finance world, which again comes away from this idea of decentralization. I think decentralization is not necessarily the goal all the time. I think one of the things that I think the blockchain gives you more than anything is choice. At the moment in the traditional financial system, you don't have choice. There's really no way to have a job and to get a paycheck if you don't have a bank account. You have to give custody of your money to somebody else, right? You can't say, pay me in gold, mail it to this address, right? And with the blockchain, you can equivalently do that in an efficient way. But the other thing is, if you don't want to do that, if you don't trust yourself, I think there's a huge cohort of users out there who are actually more safe keeping their assets on Coinbase than a regulated licensed exchange in the US than they are trying to custody it themselves. And that's okay. They get that choice. And one day, if they make a change, if they become more educated and they trust themselves more, they will have access to become self-sovereign again. Mm-hmm. And that's, I think, really the fundamental difference is you get that choice of which one you want. And because I think there's also a class of users that people often omit when we think about user experiences that actually can't take sovereignty over themselves. People who maybe are disabled in some way, who aren't able to operate without the assistance of others, will never be able to be truly self-sovereign. And I think, so the blockchain space is not necessarily about decentralization. It's about choice.
Right. Right. I totally agree with that stance. We even backed up projects that called the Zengo that kind of bridges these two aspects of the hassle of handling and your own private key and remember the seed and backing it up, and the trade-off between having many backups and security of those backups. And yeah, they're also using MPC to solve that behind the scenes. So yeah, I really like the different approaches. And so for our final question, I want to go back to the new users, the noobs, and tell them what is a rug pull and how do you spot a scam. So I bought Bitcoin. I managed to buy a Bitcoin and nobody scammed me on the way. Now I want to, I see this new DeFi project. I want to lend my Bitcoins there. How do I evaluate it? Go ahead, Loong. Sure.
I'm going to wipe the easiest answer off the table and give Terry and Ed on the hard one. Don't ever give your seed phrase or your private key to anybody under any circumstance. I don't care in what form. I don't care who they say they are in their profile. Even if it is actually the real member of the project, just don't do it. And if you're thinking about doing it, just stop thinking about doing it. Like that is the key sign of a scam. Like I've got it in my Telegram name. I've got me, in brackets, I will not ask you for my seed phrase. And we still get people coming into our Telegram being like, Loong messaged me asking me for his my seed phrase. And it's just like, just don't do it. So I look at the hard one, Terry and Edan.
That fake Loong probably also copied that. I won't ask for your seed. Okay. Okay, go ahead, Terry.
I would say the first sign.
What is a rug pull and how do you spot a scam?
Rug pull. So I think it's a relatively fresh term from the DeFi run last 2 quarters. I guess rug pull is when users FOMO into a project, put a lot of assets trying to get returns, and without really understanding the intricate risk behind the project, and the project just decides to shut down or just decides to just shut down and run away with the user's assets. I guess that's one form of definition for a rug pull. Signs to detect a rug pull, to me personally, would be, besides what Loong just said, would be anonymous teams. I think anonymous team is to me is a warning sign. I really believe that if a project has the intention to do good, there's no reason for them not to reveal themselves. And I think we talked about this just a little bit earlier. For any sustainable systems, initially it has to be sort of designed as well as implemented by a group of people. It has to start somewhere. So
what would Satoshi say about that?
That's so obviously they're anonymous, but the thing is, at that time, the space is not developed like today. So I think a lot of people are trying to sort of leverage that to try and take advantage of users that don't have the.
You're cutting out off there.
Can you guys hear me now?
Yeah, I can hear you.
Yeah. Okay.
Maybe it's just me who's cutting off.
Yeah, so I think that with the recent developments, people are trying to pray, like the whole anonymous thing, are trying to leverage from what Satoshi has built off of.
Terry, what do you think of people who are doing, like teams who are building something that regulators might not agree with, and the risk that they take on by being public?
Yeah, that could be one angle to why they want to stay anonymous, but at the same time, I feel like there could be workarounds in terms of not exactly revealing the entity, but letting people know about the track records that they've built in the past that could sort of give assurance to users that are participating in their projects. I feel like when I say anonymous, I mean that just nothing on the founding teams, nothing on the guys that are building the project. That to me is relatively scary.
I completely disagree with that. Most of our team is pseudonymous, and I think that, to me, gives a sense of confidence in the project, because I know that the people understand what they're building is designed to be a pseudonymous system and is part of a pseudonymous tradition started by Satoshi, and that there is a regulatory risk. That's why we need to build systems to create freedom. If we already had freedom, we wouldn't need all these systems. But it is a good point. Like, I mean, obviously, if you don't know who's building it, it becomes potentially more of a scam. And I think there is actually quite an easy way to avoid scams, which is to avoid almost all projects. If you don't really understand the project, you probably shouldn't be using it. Look, Bitcoin goes up 10x a year, sometimes 20x a year, right? Do you really need more than that? Or if you do need more than that, all right, fine. So you can have your Bitcoin and you can lend it out and earn a little bit of interest on that. You need more than that? All right, you can go 2x in your Bitcoin, which is pretty safe during a bull year. You probably will, can just forget about it, and you don't need to think about it anymore, and you'll see even more gains, right? So now you're at 40x. Do you really need more than that? If you really need more than that, then you're going to get into trouble. So I think, just make sure that you're doing, you're not putting your money into many different projects. Put it into Bitcoin, and then choose one or two projects. So if you heard Terry and Loong today speaking, and you think that their projects sound interesting, take a look at them, spend some time with them, figure out exactly how they work, and then maybe put a little bit of money in, and then a few months later, if everything's still good, a little bit more. But that should be the approach. This is your wealth is a long-term thing. Buying Bitcoin is like buying a house. Buying tokens is like buying stock. You don't want to buy today and sell tomorrow. The people who make money and really grow their wealth are the people who have patience.
Yeah. I think one, because you can also wait for a project. If it's been out there for 5-10 years and it hasn't had a rug pull, it's probably not going to have one.
Yes.
Exactly. Yeah, I think that reputation can build over time, even if you're anonymous. And for sure, I agree that anonymity might be a red flag if you can't, validate by yourself the code. If it's not open source, then for sure that is a red flag. But there were scams that were done by people who weren't anonymous, right? I even experienced one myself.
This whole industry.
Yeah. No, and sometimes people are gonna scam you, so take that into account and don't risk what you can't risk. So yeah, to all noobs out there, be safe, be cautious, do your own research, and thank you all for joining us today. That's it.
Thanks, guys. It was great to meet everyone.
Yeah, thank you. Bye, guys.
Bravo.
See you later.
Bye-bye.